Good day, everybody. So the end of the first month of 2022. The good news is that it seems that COVID is slowly losing some of the impetus. It seems to look like we again in hopefully a lull, and let's hope that we've seen the worst of the pandemic. I have learned not to predict these waves, but at least I think there's enough evidence to show us that we're closer to the end than the beginning. Stienemarié, welcome, and all the best. Can you believe it? The first month of the year has come and gone.
Thanks, Theo. Nice to be here. Yes, the year really started off with a bang. There was a lot of volatility in the markets, locally and offshore in January. And the Rand came back to our target levels of 15.50 Rand in January. That was nice to see. Theo, what stood out for you in January, and what can we expect for February? Some of your insights.
Stienemarié, January was a volatile month. And I think perhaps just to put it into, or to give a little, another angle on it, if you look at Bitcoin halved during the last few months. Literally halved both in dollars and in Rand terms. And I think that gives you an idea that the minute there's uncertainty, the minute that investors are uncomfortable with what is going on in financial markets, speculative instruments like Bitcoin will bear the brunt of that. But I think we must be careful just to talk about Bitcoin halving. It basically is back at where it was middle of last year. So it doubled from the middle of last year to around about November. And now it halved again. But the point is, I think the minute markets start to get uncertain, you will get this volatility. To a large extent, if you look internationally, markets were down somewhere, most markets approaching around about 10% since the start of the year. Our market is pretty much, it's down, but we talk about a few single percentage points. So it's a bit of a different scenario. So I think what we need to take out of this is that we've had a very strong 2021. And as we move into 2022, there's a few themes that are starting to come very strong into play. And these themes are around, on the one side, inflation. And yeah, I'm talking about international inflation, not only South African inflation. Yes, our inflation is also up. And unfortunately, the petrol price is not assisting us. So it's inflation worldwide. And I think most of us, you'll have to go back 4 decades, 40, 50 years, probably towards somewhere around the 1970s, when the last time US inflation was higher than South African inflation. And that kind of a high US inflation is something that they're not used to. So you have on the one hand, the inflation pressure worldwide. And some of it has to do with almost a tail end of the COVID pandemic, when there's certain bottlenecks in supply chains, and we're hearing of it more often, where the world supply of goods and services are disrupted. In America and in some European countries, you have the situation as well where unemployment is at all-time lows. The vacancies are more than the unemployed people, and that creates pressure on the labor market. So on the one side of the coin, you have the strong inflation. Then on the other side, you have central banks looking at inflation and having to make a decision on interest rates. And the question there is that, yes, we know that we're in an upward cycle in interest rates, not only in South Africa, but worldwide. So if interest rates starts to pick up, the question then is what becomes of growth? This growth that we've seen coming out of COVID, starting to recover, what's going to happen to the growth? So as the markets move from high inflation, what central banks are going to do and what the impact of growth is, that mixture creates uncertainty. And uncertainty in financial markets means volatility. So I'm not too uncomfortable with the volatility we're seeing. I think we need to understand as well that, unfortunately, like in South Africa, where the market is dominated by a few big stocks, I mean, currently, if you look at the total, if you look at Richmond, the Naspers process bundle, if I can put it that way, and the BHP Billiton and Anglo American, those 3 kind of themes are more than 50% of our local JSE. And they're all international. So it's dominated by these themes. You also have in the US markets where the three massive companies, and I'm talking about Amazon, I'm talking about things like Microsoft, Apple, those three companies are dominating the world markets, given the size what they are. And just incidentally, if you look at the market capitalization or the value of all the listed stocks in South Africa, they are any two of those three. That's Apple, Microsoft. If you look at Apple, Microsoft, Amazon, any two of those three, it's almost 10 times the whole JSE. Gives it into perspective. So why we have this problematic position of central banks, the uncertainty, expect volatility, and remember those three stocks are expensive. They are dry. They drove the markets internationally up, specifically in the US last year. So any change in the position of those three stocks will have a massive impact on how this market is looking. But I think we're going to be in for a bumpy road internationally as markets play around this effect of, on the one hand, inflation, interest rates, and growth. And then, as you say, yes, the rand is back in our target range. It started the year closer to 16 to the dollar, and it went all the way below our target range of 15.50. So we're back in range where if you underweight internationally, use this opportunity to transfer your money offshore.
Yes, thank you, Theo. I agree. Then looking into February, anything that we need to look out for in February?
Yes, from a South African perspective, we have on the 10th of February, we have the State of the Nation address by the President. Now, the State of the Nation address is government providing its agenda or roadmap for the next 12 months, for the year to come. And I think we've seen a lot of that in the first of all, the ANC's 8th of January speech, and also in the NEC Lekgotla's speech by the President. But we'll see now what government's agenda is for the next 12 months. So that is the first one. And that agenda then feeds into, on the 23rd of February, Mr. Enoch Godongwana's, that's Minister of Finance. He was appointed in August last year. Just a bit of background, he's been in the NEC of the ANC since 1997, so he must have gravitas in the party. Secondly, he has an MSc degree in financial economics from the University of London, so he's got some background in economics. And thirdly, he's got a strong trade union background. So why I note this is hopefully he'll be able to have more clout in taking his policies and decisions along with the party. But then on the 23rd of February, we have the budget. I think there's a few elements there. We are starting to see all the stories and predictions about what's in the budget in terms of a VAT hike perhaps, or a change in personal income tax. What we did see last year in the budget was a promise that we might see a 1% drop in companies tax this as of the next financial year. That's gone dead quiet. I think that's kind of COVID took a lot of that off the table. So we might not see that happening. We might see it postponed. VAT hikes, well, you hear the rumors. I'm not sure if that's going to happen. And I don't think we should kind of wait for what the media says. Let's wait for the speech. What I do think is something we're going to live with is this whole idea of a basic income grant. And yeah, I'm referring to the 350 Rand a month that was initially planned as almost a COVID relief grant. It is planned to come to an end in March. I actually can't see that coming to an end. In a country where unemployment is at the levels where we are now, I simply cannot see that coming to an end. Put into that discussion also the riots we saw in the middle of last year. I don't think government can afford that. What you have to appreciate is that, and unfortunately we're in a position, if you look at the various speeches from our president in the last month or three, the ANC is moving into election mode. That means all and every of these discussions will be measured against what's happening in the ANC election. The ANC elective conference is at the end of the year in January. It's always round about the 16th of December, end of the year, round about the 16th of December. Interesting. Last time they had the elective conference, well, the RET faction was kicked out, and Marcus Justus Steinhoff collapsed. It's just interesting that it happened within the same few days. We now saw the Steinhoff saga coming to an end with the settlement in the court. But what we are seeing is that the ANC is moving into election mode. where there will be a challenge from the so-called radical economic transformation faction, or in other words, the old Zuma faction. And I think we need to appreciate that as of now, discussions, policies, implementation, unfortunately, will be all about the ANC and the Cyril Ramaphosa faction winning the election. It's a sad state of affairs, but that is what it is, and that's what politics is about. But Stienemarié, that's enough about the background. From a practical point of view, February, or the end of February, is an important date for investors. Why is that so?
Yes, Theo. So just from a planning side, just a few things to note. So starting off with tax-free investments. So the main benefit really is that it grows tax-free any capital growth and income distributions in the product. And there's also no limitations on equity or offshore exposure. So the ideal really is to max out your lifetime limit to these products and then have it grow tax-free up to retirement, where you will also be able to then take a tax-free income from this. So the limits currently is annually at 36,000 and a lifetime limit of 500,000. So we really do recommend utilizing this product and doing those contributions. Then on to retirement.
That's probably in investments the closest to what the Americans or the MBA students like to call a free lunch, is the tax-free investment. It sounds small, but the benefits are large. If you were to give advice specifically, let's say to parents or grandparents who might believe that the time is not on their side, would you recommend that they look at starting that process even for their kids as almost a priority?
Yes, Theo, definitely. So it does sound small, 36,000 on an annual basis. But if you do the lifetime limit of 500,000 and you leave that up to retirement, you really can start building up and looking at a larger amount of up to 1 million and above that you can then start to accumulate for your child, and they can then use that for a house deposit or even keep it for retirement. So it really is a useful product to use.
Okay, and I think I agree. It's probably, if you do the calculations in terms of, let's say, a young kid or a young grandchild, if you can build this up early in their lifetime, you'll reach this limit probably around about 14, 15 years. But if you build that up when they're young, 20, 30 years later, it's a massive amount and can be not only a contribution for them to getting them started, but could be a bulk of, in the end, a retirement fund. So don't underestimate the amounts, rather look at the benefits, number one, and number two, the compounding effect over a 10, 20, 30-year period. That's the tax-free savings account, but there's also other options that investors should look at.
Yes, so onto retirement annuities. So here the main benefit really is the tax deduction that you get with the contributions that you make. And it is in essence just a vehicle then to lower the overall tax that you're going to have to pay. And again, any growth and income distributions in the retirement product is also free of tax. So the contributions currently is 27.5% of your taxable income, up to an annual maximum limit of 350,000 Rand. So any contributions over this limit won't qualify for the tax deduction. So if you're uncertain of how much you have contributed or what the maximum amount is that you can contribute, please contact your planner and we will gladly assist you with the calculation and to get those contributions done before the end of the tax year.
And I think what is important that needs to happen before the end of the tax year, and if you really want the benefit to accrue even more, once you've done this investment, you will get the credit back from the receiver, invest that as well. And that'll double that's the value that you get on this. Again, the amount, the earlier you do it and the more time you afford this to grow, the bigger the benefits would be. So I 100% agree with you, Stienemarié, that we're in February, and these are the two elements that for the month of February you should look at. You should consult your advisor if you're unsure where you are and what the maximum benefit is. But I do think one should look at that. And then, as we said, and as Stienemarié, as you said earlier, the Rand is again in our target range of stronger than 1550. If you underweight offshore, if you underweight international, use this opportunity to make sure you're in line with your long-term plan and in line with your balance.
Yes, Theo. And then just the last point, the capital gain exclusion. That is also just something to keep in mind for the end of the tax year. So every individual does have a yearly exclusion of 40,000 Rand on capital gain. So what that means is that any capital gain up to 40,000 Rand that you do make in the year won't be taxable. So this can be quite useful if there might be a withdrawal that needs to be made, or any changes that you want to make to your portfolio that can result in a capital gain. If you then use the exclusion, you can limit or offset any tax that is payable, especially if you do it over a couple of years. So just something to keep in mind as well for the end of February.
Well, I think that is thank you, Stienemarié. That's important advice, and it's advice in the broader planning, almost the broader financial plan linking into estate planning. But I do think these are the things that one should be cognizant of, and you are welcome to talk to your advisor. On the tax side, we recommend that, although that's a principle, but do that in line with your auditor who is responsible for your tax affairs, because these things can get tricky. Stienemarié, thank you very much, and thank you for joining me this month. And we wish all the clients and all the viewers, let's hope that the COVID pandemic is slowly starting to fade. I think we all need it. We all need a bit more certainty, but don't become careless. Hopefully we're close to them, but please don't become careless. We're still not at a point where one can say this is something of the past, and hold thumbs that there's not another wave.
Thank you, Theo, and looking forward to the year ahead.